It all started with a cup of tea and a biscuit. That simple, everyday moment, warm mug in hand, the comforting crunch of a biscuit, was when I first let my mind wander beyond the familiar. I remember the gentle clink of the cup, the steam curling up, and the quiet hum of possibility in the air. It was a pause, a breath, a chance to dream. I was sketching, letting my pencil dance across the page. My drawings were small, contained, but my imagination was restless. I found myself doodling not just characters, but little ladders, doors, and windows, symbols of escape, of reaching for something more. I was dreaming small, but deep down, I was craving something bigger, something that would challenge me in ways I'd never experienced before. Then one afternoon, my friend introduced me to the stock market, a world I'd only heard about in passing. Suddenly, I was staring at screens filled with trends, charts, and mysterious symbols. Bulls and bears danced across the graphs, and the language of finance felt like a secret code. It was a universe of its own, pulsing with energy and opportunity. The numbers were staggering, huge, dramatic, and always moving. Every tick of the chart seemed to tell a story. The possibilities felt endless, almost dizzying. I was both intimidated and fascinated, caught between fear of the unknown and excitement for what might be possible if I dared to step in. Could I, an animator who spent most days lost in stories and sketches, really understand this world of finance? The idea was both thrilling and terrifying. I felt like I was standing at the edge of a cliff, looking out over a vast, unfamiliar landscape, wondering if I could learn to fly. I opened a trading website for the first time. The screen exploded with flashing lights, squiggly lines, and numbers that seemed to change every second. It was chaos, beautiful, electrifying chaos. I felt lost, but also strangely alive, as if I'd stumbled into a secret festival where everyone else already knew the dance. But as I watched the charts, I realized there was a story unfolding in every rise and fall. Hope, fear, ambition, and defeat, all playing out in real time. Companies soared and crashed, fortunes were made and lost, and behind every number was a human dream. I saw not just data but drama. I wanted to learn that language, to understand the rhythm and meaning behind the numbers. I wanted to write my own chapter in this vast, ever-changing story. It felt like learning to read all over again. But this time, the alphabet was made of candlesticks and moving averages. My goal was simple but powerful. Challenge myself and make my money work harder than it ever had before. I wanted to see if I could turn curiosity into skill, and maybe, just maybe, grow my savings in the process. It was about more than money. It was about growth, courage, and self-discovery. The dream of £1 million was a distant star, twinkling on the horizon. It felt impossibly far away, but also strangely within reach if I just kept moving forward, one step at a time. More than anything, I just wanted to learn something new, to stretch my mind to see what I was capable of when I stepped outside my comfort zone. Every page, every lesson, every mistake was a step toward a bigger world. That small step from my armchair, leaving behind the familiar for the unknown, sparked the most incredible 2-week journey of my life. It was the beginning of a story I never expected to write, and it all started with a cup of tea and a biscuit. You might think I used some complex algorithm, but my strategy was simple. I called it the bouncing ball strategy. Some stocks fall to a floor, a support level, and bounce back up. My job was to find that floor by studying charts for recurring price levels. When the price touched the floor, I'd buy. Patience was key. Wait for the perfect moment. I wasn't trying to catch a falling knife. I waited for the bounce. Selling was about spotting the ceiling, a resistance level. I'd sell just before the price hit that ceiling. The plan: find the floor, wait, buy, and sell on the bounce. Simple, clean, and easy to follow. That's how I started. My living room became a workshop of charts and notes. I started with paper trading. Pretend money, real trades, zero risk. I hunted for the bouncing ball pattern, circling support levels, tracking outcomes. Sometimes it worked, sometimes the ball crashed through the floor. Every trade, win or lose, went into my logbook: date, stock, reason, emotions. Patterns emerged. I was often impatient, buying too soon. Seeing my mistakes in black and white helped me build discipline. After weeks of practice, my confidence grew. My paper trades showed the strategy worked if I followed the rules. I learned its strengths and limits. It wasn't magic, just a tool I'd learned to use. Time to try the real thing. My first real trade was nerve-wracking. I remember sitting at my desk, heart pounding, palms sweaty as I watched the numbers flicker on the screen. It felt like I was about to step onto a roller coaster, not just buy a few shares. I'd read all the books, watched countless tutorials, and thought I was ready. But nothing prepares you for the real thing, the moment your own money is on the line. I bought shares in a garden gnome company. Chart looked perfect. The setup was textbook. A clean breakout, volume rising, all the indicators lining up. I imagined myself telling friends about my clever pick, already picturing the profits. It felt like a sure thing, and I was convinced I'd found my golden ticket. But almost immediately, the price dipped below my entry and my stomach flipped. I watched helplessly as the green turned to red, my confidence draining away with every tick down. It was like watching a slow-motion car crash, and I couldn't look away. I learned quickly, emotional attachment is dangerous. I didn't want to let go. I kept telling myself it would bounce back, that I just needed to be patient. But deep down, I knew I was clinging to hope, not logic. I held on to a losing tech stock, hoping for a turnaround. It never came. Every day I checked the price, waiting for a miracle. Instead, the losses just piled up, and I felt more trapped with each passing day. My small loss became a big one. What started as a minor dip turned into a gaping hole in my account. I realized too late that hoping for a reversal was costing me more than just money. It was costing me my peace of mind. Impatience was another enemy. I'd buy before the price truly hit the floor. I was so eager to catch the bottom that I'd jump in too soon, only to watch the price keep falling. It was like trying to catch a falling knife, painful and reckless. Starting trades early filled me with anxiety and regret. I'd second-guess myself, wondering why I couldn't just wait for confirmation. The fear of missing out made me act rashly, and I paid the price for my impatience. The emotional roller coaster was intense, highs on wins, crushing lows on losses. One day I'd feel invincible, the next I'd question everything. Trading wasn't just about numbers. It was a battle with my own emotions. After a string of losses, I doubted myself. I wondered if I was cut out for this, if maybe I just didn't have what it took. The self-doubt crept in, making every decision feel heavier. But my logbook showed the strategy worked more often than not. When I looked back at my records, I saw that the plan itself was solid. The problem wasn't the system, it was how I was executing it. The problem wasn't the plan, it was me. I had to face the uncomfortable truth that my emotions were sabotaging my trades. It was a tough pill to swallow, but it was the first step toward real growth. I had to separate feelings from decisions. I started to see that discipline mattered more than excitement or fear. Trading had to be about following rules, not chasing feelings. Trading isn't personal, it's about process. I learned to treat each trade as just one of many, not a make or break moment. The more I focused on the process, the less the outcome of any single trade mattered. I learned to trust my rules, not my hopes. I stopped making decisions based on what I wished would happen, and started acting on what my plan told me to do. Losses stung, but they were lessons. Each mistake was a chance to improve, not a reason to quit. I started to see losses as tuition, painful but necessary for growth. I kept going, determined to improve. Every setback became fuel for my determination. I promised myself I wouldn't let mistakes define me. Each mistake made me stronger. With every error, I gained a little more resilience, a little more wisdom. I started to see progress, not just in my account, but in my mindset. The journey was tough, but I was learning. Every challenge was a step up the mountain, and even when I slipped, I kept climbing. The view from each new height made the struggle worth it. That's how I grew as a trader, not by avoiding mistakes, but by embracing them, learning from them, and letting them shape me into someone stronger and wiser than before. Let me share a trade that went perfectly. A rare moment in the unpredictable world of trading, but one that reminds me why I keep coming back. I'd been watching global biscuits looted for weeks, maybe even months. The stock had a rock-solid floor at £50, bouncing off that level time and again like clockwork. When the price dipped to that floor, I didn't hesitate. I bought in, stuck to my plan, and sold just before the ceiling at £54. No drama, no second guessing, just following the signals. The whole process was calm, methodical, almost boring. But in trading, boring is beautiful. It means you're not chasing excitement, you're sticking to your strategy. Boring means the plan is working. It's a sign you're not letting emotions take the wheel. But let's be honest, not every trade goes this smoothly. Sometimes the market throws you a curveball, Take my experience with a renewable energy stock. The floor looked weak, but I took a chance. The price bounced, then faltered, slipping right through my safety zone. My stop-loss rule kicked in automatically. I sold at a small loss, just as I'd planned if things went south. It stung, of course. No one likes to lose, even a little. But it wasn't a disaster, and that's what matters. The key was having a safety net, a plan for when things go wrong. That's what separates a calculated risk from a reckless gamble. Losses were controlled, not catastrophic. I lived to trade another day, and that's the real win. My logbook is full of stories like these. Some wins, some losses. The difference isn't luck, it's discipline and sticking to the process. I learned to trust my process, not my emotions. Logic over panic every single time. Every trade, good or bad, taught me something new. Each one added a lesson to my toolkit, making me a little wiser, a little steadier. That's how I survived the jitters, the anxiety, the second guessing, the urge to panic. I learned to breathe, reset, and move forward. And that's how I kept trading, day after day, always ready for the next challenge and always learning from the last. The stop loss was my most important invention. It's an automatic order. If the price falls to a set level, sell immediately. It's your emergency exit, your safety net. Placing it just below the floor protected me from big losses. With a stop loss, losses became business expenses, not personal failures. I knew my risk before every trade. Fear faded. It let me focus on good setups, not worry about disaster. During my best 2 weeks, my stop loss quietly protected me. Some trades hit it, but losses were small and manageable. It kept my capital and confidence intact. One bad trade couldn't wipe out my progress. Risk management was everything. I never broke this rule. Trading is a battle of psychology, not just numbers. Fear and greed are powerful. Greed tempts you to hold too long. Fear makes you panic sell. FOMO leads to chasing trades and mistakes. My logbook exposed the cost of emotional decisions. I learned to treat my plan as a script. Follow it no matter what. Sometimes the best trade is no trade at all. Taming emotions was the real turning point. The market taught me lessons I'd learned in animation. Success comes from a simple, repeatable process, a storyboard for trading. Patience is vital. You can't force the market. Learning from mistakes is everything. Analyze, adjust, move on. Every loss was a lesson, not a disaster. Protecting capital is the foundation. Risk management first. Focus on not losing big, and you give yourself a chance to win. Embrace mistakes. Refine your strategy. Consistency and discipline matter more than genius. The market rewards those who respect the process. That's the real secret. How did I make 1.2 million in 2 weeks? Preparation met opportunity. The market was perfect for my strategy, and I was ready. It wasn't luck. It was hard work and discipline. You don't need to be a financial wizard. Start small. Find a simple strategy you understand. Begin with paper trading. Learn before you earn. Keep a detailed journal. It's your best coach. Use a stop loss on every trade. Protect yourself. My story isn't a guarantee, but a blueprint. The goal isn't to get rich quick, but to get smart first. Be curious, be patient, learn from mistakes. Build your own strategy, your own storyboard. The market is a story. Learn to read it and write your own chapter.